Hello and welcome to Last Week in Finance. Today is April 11th of 2021. Yes, this is not a mistake. All-time highs again. So let's start with the numbers. The S&P 500 up this week almost 3%. Right now the S&P 500 is at historic record level highs, 4,128 points, just as the Dow, the Nasdaq, whatever. The DXY, the US dollar index, contracted this week almost 1%. Right now, the DXY is at 92 points. Gold apparently trying to make a comeback, although it kind of froze on the last few days of the week, 0.44% for the week. Right now, the ounce of gold is at $1,742. Silver, some gains on the week, 1.27% up. And right now, the ounce of silver is at $25.26. Copper actually started getting some bear market, contracted ugly this week, 2.27% minus for the week. Right now, the pound of copper is at $4.05. The crude oil also took a huge hit. The West Texas went down minus 3.15%. The barrel of crude oil right now is at $59.32. Also with a huge plunge this week was the 10-year Treasury bond, minus 6% for the week. Right now, the yield of the 10-year Treasury bond is at $1.66, 1.66%. I'm sorry about that. And of course, crypto guys, you're on a roll right now. Bitcoin it's at $60,000. It was plus 6% for the week. So crypto is getting bullish. It's in a kind of a loop in the past, let's say, month when it was between 57,000 and 60,000. So it's been fluctuating on those range, which is stable for crypto standards. So very well with Bitcoin. When this is one of the indications that we are in an strange market. The most stable in the past few weeks has been Bitcoin. Who will know? Okay, now with the news, the jobless claims report was higher than expected. Almost 750,000 new jobless claims for the week, way higher than expected. It was expected something like 650,000, something like that, but it was way up. Apparently, it's more lucrative to just file for jobless claims than just get a normal job. Apparently, some entrepreneurs and small business owners, and actually not so small business owners, are reporting they are getting trouble to hire new people, especially in these low wage jobs, because right now uh, they have to outbid the government with the stimulus checks and the jobless claims. So it's more profitable in some cases to just don't do nothing, stay home and collect the jobless insurance checks or the stimulus checks for that matter, instead of getting to job and getting to a real job. And I mean, it's a simple cost benefit analysis. It's better to just stay at home and spend time with your family or playing video games or whatever, instead of working. And is a sad fact, but nevertheless is a real true one that we find in the economy. Right now, uh, one of the one of the reports of the PPI, the Price Producer Index, went up year of the year 4.2%. I mean, this inflation narrative is getting real. But still, the Fed says that inflation is temporary and it's just secular inflation. It's not real long time inflation proposed by the central banks. So, not gonna end well, guys. Always tell you about that. Of course, the Treasury Secretary Janet Yellen is proposed this week a global minimum tax corporative tax rate around the world. And many governments around the world are on the same boat. Now, how this will work? Apparently, it's gonna be proposed among G20 countries, OECD countries, and let's be real, those those governments already have high taxes for corporate and such. So the thing is, they're not gonna do anything because they're just gonna keep their their tax rates high, just like they have right now. So they're not doing anything. The real countries they're gonna take advantage of this and have lower taxes. Gonna have lower taxes. They're not going to. Of course, they're not going to increase their taxes. That's their leverage. Talking countries that are quasi close to being tax havens, offshore tax havens, they're not going to raise their corporative tax. They're not going to change their tax codes. So that will be stupid. And of course, among these, rich Western countries, they're going to keep their tax. They're going to still keep their tax high enough. The only thing is they maybe close some loopholes in the tax exemptions. And by that, applying that, they're most likely just gonna not they're not gonna cut some slacks to these big corporations with this very creativity accounting. So maybe the deductions of the final tax payment it will be less. I mean, it will be more because it will be less exemptions, less accounting gymnastics for this company. So I mean, I don't care. It's just stupid. Just demonstrating that Janet Yellen is a stupid person and whatever. So let's going on. Right now, what we're seeing is a race to the bottom. These people, Yellen, Christine Lagarde from the European Central Bank, and so on and so on. They're just gonna apparently keep keep creating more money, develop their own currencies, and maybe keep it the same among them. The exchange value among these hard currencies. The dollar, the euro, the pound, whatever. But at the end, it's gonna be the same thing, and they're gonna get devaluated against real assets like gold, silver, Bitcoin. Well, you can argue if Bitcoin is a real asset or not, but whatever, a real estate, and so on and so on. And still, so we're keeping the race to the bottom, quote unquote. Right now, also the indications of there is a bubble in the stock market are getting stronger. The trading volume in the stock exchange was the lowest since late December. I mean, December 24, the Christmas Eve. So we had a very low trading volume. Maybe the smart money is trying to get out or is going to start to get out to the stock market. Also, the buffer indicator, the Wilshire 5000 versus the GDP, is at historic highs. That means the market is way overvalued. So it's gonna end like always ends. Smart money buys low, then people start cramming up and pumping up the market. Then the dumb money start going very, very, very high to the market, and at some point it's gonna be a quick rush to the exit, and many people are gonna lose a lot of money. Like always happens, I think that's it's going to happen anyway. And finally, I want to close with real estate news. Right now, Austin, Texas is the hottest market in the US. It's probably the biggest bubble we are seeing right now is in Austin, Texas. Of course, after that is southern Florida, Miami, and all the places around Miami and Miami-Dade County are getting very, very expensive and overbought. So be careful about that if you're in Florida. Charlotte is the third most hottest market in the United States, so very careful about that. And also small counties in Southern California also going bullish. And why is that? Because right now with the telecommuting and people are doing relocation, so they don't have to live in these very expensive places in Los Angeles, San Diego. I mean, it's not Southern California, but also San Francisco. So what people are doing? They're just moving a few hours away from these very overpriced places to live, and they're living in cheaper properties, cheaper rents, whatever the case. They have more space, they're more comfortable, they're paying less, and things are doing okay for now. So real estate is another massive bubble that we're seeing. It's gonna correct at some point. Maybe not as much as that huge correction that we had in 27, 28 with the GFC, but we're gonna see a huge correction. People, there are a lot of reports that people are not paying the rent. Remember, most of those properties are with a mortgage, so the landlord can pay the mortgage, and so on and so on and so on, and will take a huge hit on the real estate prices. So that will be all for this week. Thanks for listening. Remember, you can also find this podcast on YouTube if you prefer to watch it on YouTube. And we will see you next week. Bye bye. Take care.